Welcome back. Okay, we talk real estate now in the midst of COVID-19, a very different market that we're looking at. Let's bring in Mike Eppel joining us now via Skype. Good morning to you, Mike.
Hey, Melanie. How you doing this morning?
Doing all right. So this is an interesting outlook. So when it comes to real estate, what are we looking at right now?
It's the forecast from Royal LePage. They've issued their first quarter summation, and as you might expect, things really slowed down in the second half of the month of March, and now it's about looking ahead to what to expect in real estate. And this is a national forecast. They break it down by regions and cities as well, and we'll delve into these numbers through the day. But what they're saying is, like everything else, it depends on how long these strict stay-at-home restrictions are staying in place. Do they go to the end of the second quarter? Are they extended right through the summertime? You know, how much damage is there from an employment standpoint? Again, if you lift the restrictions, then people get their jobs back, and then you can start to say, okay, this is what we're looking at from an economic standpoint. If people are on the unemployment lines, and that's, we're talking about millions of people at this point, well, then you're going to see a price decline overall. They're saying best case scenario, by the end of the year, prices could be up by 1%, again, nationwide. On the downside, we could see a loss of about 3%. So it's a fairly narrow range, actually. And in Royal LePage's words here, remarkable resilience. There was so much pent-up demand for real estate going into the pandemic that it's not a huge surprise to say that prices aren't going to fall all that much. Yes, there will be some distressed properties for sale, but those will be more the outlier than the actual true indication of the overall market. And keep in mind, mortgage rates are incredibly low still.
Yes.
People are going to refinance, and they're going to be looking at this. In some cases, again, people were saying, I can't find anything to buy, so will there be listings? People are doing virtual open houses through Zoom. I saw some of those this past weekend. So the market is still moving, surprisingly, even with everything else that's going on.
Yeah, we talked about that before, and I don't know. I mean, I think initially you can take a look at these homes virtually, but for me, you want to set foot in it. Yeah, you definitely want to go inside at some point.
I know. It's the strange new world, right?
It's interesting. Okay, let's talk about the funds. A lot of people have applied for the Emergency Response Fund, the Fed's money, a number of them, more than $5 million.
And probably going to hit $6 million in the very short term. That's the Canada Emergency Response Benefit, $2,000 a month. And so we had those job statistics for March, which showed 1.1 million Canadians losing work last month. It's going to be exponentially higher for the month of April and into May, as we're starting to see the precursor of this. Again, the applications for these emergency cash benefits coming out of Ottawa. That's more of a true indication of how many people have lost work in the gig economy, part-time jobs, jobs that didn't have benefits specifically. And, the immediate impact of a shutdown of non-essential businesses rippling through the economy is really indicative of how many numbers are being tabulated there at the federal level.
Absolutely. We've been talking about this for some time when it comes to our Canadian farmers, and now the federal government announcing some assistance here.
$50 million to farmers and the fisheries industry for foreign labor to come into the country. It is a very slow process. I've got relatives in this industry, in the veggie market specifically, the vegetable market. And, asparagus is coming up in May. They're trying to get workers to come into the country. There are tight restrictions on how many workers you can have in mobile homes that are set up on these farms, much reduced, and they have to stay in quarantine for 14 days. So it's a slow churn here of trying to get workers into the country. And then you can't bring in the number that you'd want to necessarily at the start of the year. Some farmers are talking about bringing in, up to 500 workers on a single farm. I mean, we're talking about thousands of acres, of course, but, you're trying to work through the system. And, a lot of produce, you hear about this in the United States right now, a lot of produce can't get to market because the supply chain has been damaged so much that it's not being picked, it's being plowed under, even though there's huge demand right now for fresh produce coming out of the United States. A lot of it is dying on the vine, so to speak, because of the labor issues that everybody's dealing with. Not just here at
Mike,
home.
We've run out of time. Can you just roll through really quickly some of the big winners that we've seen through this pandemic, and no surprises here, this list?
Amazon is at a record high this morning for its share price. Jumped more than 6% yesterday. They're actually raising or lifting the restrictions on non-essential goods going into the warehouse. They had a lot of, they were trying to focus on getting products, essential items out to customers, but they've hired 100,000 people and are looking for 75,000 more to expand their warehouse capabilities. Netflix is at a 2-year high as of this morning, almost $400 a share. We've seen Disney climb as well, just because of streaming services, Melanie. All of these companies picking up some big business. People are indoors.
Yep. That makes sense.
Trying to figure out what to do.
I just subscribed to Disney Plus. Hands up. I contribute to that. All right. Thanks,
You're
Mike.
You're one of the 50 million.
I'm there. Got to do it. Got to watch my Moana. Okay. It is 6:48.